Do you think fear and greed among the crowds can predict future price movements in the crypto market? Today, we're going to look at a very popular tool, the Fear and Greed Index. Some say it helped them avoid crashes, while others say it's just a gimmick and more psychological bullshit than anything else. But who is actually right? In this video, we're going to see what the Fear and Greed Index really is, and I'm going to create investment strategies that are based solely on this indicator. Then I'll backtest them over several years of data to see if it actually delivers. Is it more powerful than a simple buy and hold? Believe me, the results will surprise you. Okay, so before judging whether the Fear and Greed Index is reliable or not, first we need to understand what it actually measures. Because no, it's not a magical indicator. It's actually a weighted average of several factors that reflect the overall sentiment of the crypto market. Here are the different emotional thresholds that are represented by the values of the Fear and Greed Index. Basically, every day it assigns a score between 0 and 100. And when the index is close to 0, it means that the market is dominated by fear. Investors are selling, doubting, and avoiding risk. On the opposite side, the closer it gets to 100, the more it means total greed. Everyone is buying, sometimes without thinking, convinced that prices will only go up and believing that this time it's different. But how is this score calculated? The index is based on several criteria. First, Bitcoin volatility, because high volatility often means a nervous market. Second, momentum and trading volume, which show whether people are rushing to buy or sell and with what intensity. Third, social media trends, especially on Twitter, throughout keywords and hashtags related to Bitcoin. Fourth, Bitcoin dominance, because when it increases, it usually means that the market is in a defensive phase. And finally, the Fear and Greed Index also takes into account search engine trends. For example, keywords like Bitcoin crash or how to buy Bitcoin. And all these elements are then combined into a single score that translates the emotional state of the market into one number. It's basically a thermometer of collective psychology. And that's where it becomes fascinating, because this index doesn't measure objective financial data, but human emotions. It translates panic, excitement, confidence, and fear of missing out. In short, basically everything that makes the crypto market so unpredictable and so human. But why do emotions play such a central role in crypto? Well, in my opinion, it's because it's still a relatively young and volatile market, with a huge number of retail investors. As a result, price movements don't always follow logic, but rather fear of losing and fear of missing opportunities. And the worst part is that these emotions are collective and contagious. When someone sees everyone panicking, there's a very high chance that they start panicking too. And when someone sees everyone else saying that prices will only go up and that you must buy, then there is a very high chance that they'll want to buy as fast as possible. The Fear and Greed Index captures exactly these moments. It doesn't try to predict the future, it simply takes a simple snapshot of the overall sentiment of the crypto market. So, the real question, now that we understand how the Fear and Greed Index works, is this: can we rely on emotions and crowd psychology to build a profitable crypto strategy? And that's exactly what we're going to test right now. So to answer this, I set up a backtest. The idea is simple. We simulate what an investor would have done in the past by only following the values of the Fear and Greed Index. So here are the rules that we're going to test. When the index drops to 25 or below, meaning it's in extreme fear territory, we buy Bitcoin. And when it goes above 75, which means it's in extreme greed territory, we sell everything. And outside of these zones, we do nothing. So as you can see, this is a very simple strategy based on emotional extremes. And most importantly, it's 100% mechanical, no subjectivity, no technical analysis, just reacting to the values of the Fear and Greed Index. At the beginning of this video, I told you that we want to know whether this strategy performs better than a simple buy and hold. So first, to have a benchmark, here is what buy and hold on Bitcoin would have yielded over the last 8 years. So total return 1,991%. That's an annualized return of around 43%, and the max drawdown was around minus 84%. So to build this strategy on Obside, I just used the following prompt. I wrote buy 5,000 worth of Bitcoin at once. So these metrics right here will be our reference. So now to test the fear index strategy, I need to create a new algo strategy. I'll select BTC USDT to have the historical price history on Binance so that we have at least 8 years of data. And here I'll just write in plain text the rules of the strategy that we want to test. So for example, I'll say buy Bitcoin when the fear and greed index goes below 25. And we'll say sell the entire position when it goes above 75. And I will add one more element. I will say only one trade at a time, so that it doesn't, like, for example, if it goes below 25 but then reaches 26 or 27 and then dips below 25, we don't want it to buy every single time it goes below 25. We just want it to buy once when it's below 25, and then it will have to wait until it goes to 75 to sell the position. We'll backtest it from August 2027 up until today. I'll click here to analyze the strategy to see if the rules are clear enough. Supposedly, yes, they are. And let's launch the backtest. This should usually take between 30 seconds to a minute. In the meantime, feel free to give a thumbs up if you like this experiment. Okay, the backtest is ready. Let's check the results. Uh-oh. Well, this wasn't great at all. Over the span of 8 years, we only got a 37% total return. That's an annualized return of 4% only. Well, the max drawdown was much lower than holding Bitcoin at only minus 20%, but we left so much money on the table compared to what holding Bitcoin would have returned. So clearly, buying, as the famous saying says, buying when everyone else was fearful and selling when everyone else was greedy, this wouldn't have worked at all on Bitcoin. Now, I'm curious, what would have happened if we bought when everyone else was greedy and sold when everyone else was fearful? Basically, going with the crowd psychology. Okay, so to do that, I'll just copy and modify the current strategy, and I'll just slightly tweak the rules. I'll say buy Bitcoin when the fear and greed index, we'll say this time, goes above 75. Sell the entire position when it goes, this time we'll say below 25. We'll still keep one trade at a time. Let's analyze the results, and the backtest should be ready to start. I'm really curious to find out what the results will be. It's cooking.
Say my name.
Okay, well, obviously it was clearly better to go with the crowd psychology than go against it, because over the same time period, 8 years or 8 years and a half, the total return was 800%. That's an annualized return of 31%. As a reminder, the buy and hold annualized return was 43%, so higher. But look at the max drawdown here, only minus 7%, which is way lower than the max drawdown that the buy and hold had, which was roughly minus 83%, if I'm not wrong. But let's look into more details. When I look at the unrealized evolution of the capital, not only here when the trades are closed and open, but like if we followed the accounts balance day after day, the actual drawdown that we would have to live through would be higher than the minus 7%, because here we went from $43,000 as our balance to $26,000, so roughly a 30% like unrealized drawdown that the balance would have had to go through. But still, those are like much better results than going against the crowd psychology, obviously. Tell me honestly in the comment section if you truly thought that going with the crowd would give better results than going against the crowd. Now, I actually would be really curious to see if we had similar results with altcoins. All right, let's test it. Here are the results of buying and holding altcoins over the last 8 years. So I included a bunch of altcoins in addition to Bitcoin. So we have Solana, Ethereum, XRP, and Binance Coin, as well as Bitcoin. So over the last 8 years, we can see that it gave a total return of 2,000% with an annualized return of 43%. And the max drawdown in the same ballpark as Bitcoin's max drawdown, minus 86%. And to obtain these results, my strategy rules were buy $1,000 worth of each crypto. So I equally split $1,000 among those 5 cryptocurrencies. Now we're going to try the same thing again. That means like buying all the altcoins when the fear and greed index goes below 25 in extreme fear territory, and we will sell it all when it goes into extreme greed territory above 75. So on Obside, I created a strategy. I added the 5 cryptocurrencies, and we'll just say split the available capital equally among all the cryptos when the fear and greed index goes below 25. And we will say sell the entire positions when it goes above 75. And here again, we will say 1 trade at a time per crypto. Okay, so we will backtest that again over the last 8 years. Let me click analyze, should be all good. And then I'll start the backtest. Here again, I'm really curious to see what it leads to. Wow, actually this is pretty catastrophic. Over the last 8 years, we wouldn't have made any money. To show you how the unrealized capital behaved, this is it. Total return minus 18%. The max drawdown was actually lower at minus 40%. So on altcoins, like going with the famous saying, buy when others are fearful and sell when others are greedy, was absolutely not the right way to go. Now, let's try the opposite. Let's try going with the crowd. So I'll just slightly change the rules. We'll say we want to buy when the fear and greed index goes above 75 and sell the entire positions when it goes below 25. Okay, let's quickly start that. Fire it up, and let's see the results. Well, that's night and day. Now we're talking 5,000% total return over the last 8 years with an annualized return of 114%. So beating buy and hold by a very large margin. And the max drawdown was very minimal at minus 6%. Actually, on the unrealized equity curve, it might have been slightly higher because this max drawdown is based on the realized capital. But yeah, I can see we went, for example, from 150,000 down to 115,000. So that's a max drawdown here about roughly 20%. But overall, this looks very strong compared to buy and hold as well, of course, compared to buying when the fear and greed index is in extreme fear and selling when it's in extreme greed. I want to be fully honest here. When I had the idea of running these experiments, I absolutely did not expect that buying into greed and selling into fear would completely outperform the contrarian approach. Sure, here most of the returns actually came from the 2021 bull run, but still over the next 4 to 5 years after that, the crowd psychology following approach still continued to yield returns and positive performance. In the end, this experiment shows that it's not the emotions themselves that matter, but the market context in which they appear. It also shows that the fear and greed index is actually a very poor indicator for calling tops and bottoms. On the contrary, it might be an excellent trend following indicator. If you enjoyed this video, feel free to smash a like, comment, or subscribe to the channel. As for me, I'll see you soon. Bye.